Hello, everybody. Welcome to GCRE TV. My name is Gavin Nathan, and today we're going to be speaking with Elliot Horowitz from H Equities about his thoughts on COVID-19, the impact it's having on his industry, and what he sees happening. Also, what's going on with his clients, and how he could sort of help advise people on, from his perspective, how they could deal with this as they go forward. Elliot, hi. Good afternoon. How are you?
Good, Gavin. How are you? How's everything?
I'm doing fantastic. The weather is fine. It's still sunny, so we're happy still.
We're in good shape. We're in good shape.
Good. Elliot, it's nice of you to join us on the show today. We just wanted to pick your brains a little bit at GCRE, about your thoughts on COVID, how that's impacting your business, your clients, the relationships that you have with potential prospects. What do you think is going to be happening in the industry come the next 3 to 6 months or 12 months down the line? And also any little additional information like, pointers, tips, tricks for people to consider as they go forward. Don't worry, we're not going to drill you too much because we're friends.
I have nothing to add, so that's great.
Okay, good. So Elliot, just a little bit, what's your thoughts on COVID right now? What's happening? What do you see going on in your particular industry with your clients? With your clients?
So COVID specifically, I guess everyone's become an expert overnight, right? We all have to have an opinion, and we all have to understand it. And most of us, myself included, don't really know what's really happened or has been happening. We do know that in major markets, certainly industry has been affected, terribly. In New York, with the office buildings being shut down, specifically retail being shut down, now opening. Restaurants have been shut down, now opening. So clearly this virus, or whatever that people are calling it today, has impacted in a way most people in March could never anticipated, myself included, right?
Yeah.
So that's a certainty. What happens tomorrow and next week, and then 3 months from now, nobody knows, right? So I keep reading and hearing different things. It's hard to know. I think one part of me kind of thinks it's all nonsense, right? And the other part of me thinks there's something really wrong going on right now. And clearly there's been unfortunate circumstances of death, and that is always unfortunate. But how it relates to the world in general, I don't know. Specifically in New York and other major markets, and specifically New York has gotten hurt the most with, we have the most densely populated office space on the planet, and the train system and all of that. But slowly but surely, I've seen some life come back, which is good, right? Which is a good thing.
Yeah, that's always a good thing.
Right. So, I work in Brooklyn in the summertime. I've been in New Jersey, but I work in Brooklyn, and the area there is always very vibrant, very robust. And lately, even including yesterday, it was kind of quiet still in my building, in and around the area. It's Dumbo. It's a very vibrant neighborhood. Still quiet, but again, you're seeing some signs of things picking up slowly, right? And that's a good thing. That's a good thing.
Yeah. So Elliot, a little bit about H Equities, what it is all about, just to give the viewers an idea of what it is you do before we kind of go into more deeper questions. Can you elaborate a little bit on what H Equities does and what it is you do?
Yeah, sure. Thank you. We are a small friends and family debt and equity business. We provide capital to sponsors, to operators. On the equity side, it's mostly in multifamily in New York, New Jersey, Atlanta, Florida, where we've already executed on deals on all those states. All multifamily. There's been a couple of mixed-use pieces, a couple of development deals, but mostly it's existing cash flowing multifamily as equity. And then as debt, we provide debt financing, whether it's senior loans, mezzanine loans, or preferred equity to sponsors. That's mostly been New York. We're expanding. We've done a little bit in New Jersey. We are now trying to. We almost had a nice, very nice sized loan close in Florida, but the last second the borrower didn't need money, which is always fun to do, right?
Right. Yes.
So we're slowly expanding that debt book out. And I do say slowly, with the emphasis on slowly, expanding that debt book out to other states. North Carolina, we're looking at something. We're looking at making loans on a portfolio of properties across the eastern and the southeast. So that's, again, senior financing, mezzanine, and preferred equity. It's mostly been multifamily, land, or just other people have real estate, just sort of other liquidity needs that don't necessarily have a business plan wrapped around it, but just a low levered liquidity need that a borrower needs for whatever they need.
Yeah. So based on what you just said, Elliot, I mean, given it's a financial market that you're in, is one would think that it's been heavily impacted. Finance has been heavily impacted with the COVID. What are you seeing happening right now with your customers or clients? What do you see the banks or the lenders doing? With this whole COVID thing that's happening.
Right. So I think in the early stages, when this first happened, call it March, whatever that date was, March 13th, 14th, or whatever the date was, a lot of banks and private lenders started telling their existing borrowers, we're not doing the deal starting tomorrow, right? So that was a shock to the system. We actually closed a couple of loans during that period and got paid off on another loan during that period by a bank that still executed, right? So I think every private lender will do what they have to do to stay in business or live up to certain things or not live up to certain things. Fast forward to today, I thought there was going to be a significantly greater need of capital for borrowers, and it just seems like a lot of borrowers are chasing deals they can't get or think they're going to get, but only if they had this and this type of financing, which still isn't available, right?
Yeah.
So if you want 100% financing, maybe there's a crazy person out there that will do that for hopefully a high rate, right? But I think there's been a slow shift in borrower expectation, which is a buyer, right? Borrowers typically buyers, and sellers, depending on the asset class, are either giving things up or they're not, right? Multifamily is still pretty strong. Hotels are super weak. Retail is very weak, but I think within the very weak, there is some opportunity as well from both as debt and equity. Certainly in the strong, there's opportunity, right? So their opportunities are out there. Our investors, some are, chomping at the bit to put money to work, and others are sort of taking a wait and see approach. We have a lot of deals we're reviewing personally. Not a lot's getting done lately for a variety of reasons. Rate and leverage is a key component of what we look for, and counterparty risk, who we're lending to, who we're investing with, always very important. But there's opportunity. There's certainly opportunity here going forward.
Yeah, I think that's what it is. So you said earlier that multifamily is still quite strong. Do you see multifamily coming out of this as one of the top category classes in the sector, or do you think like mobile home parks are still going to be strong? Maybe there's an opportunity for retail space. As you know, shop fronts on the main shopping strips are closing down, but I think that's going to be seen as opportunity zones now for investing.
Right. So multifamily is very strong for the most part in good areas. Single family rentals are very strong for the most part, very strong. People need a place to live, right? Most people who are making money will pay rent. They feel obligated, they'll do it, right? Some people who, unfortunately have financial circumstances that don't allow them to pay rent right now, and it's very unfortunate. And they're gonna they'll be challenged to pay that. And there are certain government programs and some unemployment money has helped some people, which is great, right? And some people will take advantage of the situation, as some people tend to do. But generally speaking, people need a place to live. People want to pay rent. They want to do the right thing. There's always the outlier of people that are having a hard time, unfortunately, very unfortunately, and those that maybe can get by, but they need a little pushing to get by. So multifamily will stay strong. Retail, if you have some shopping center in the middle of nowhere, you have a problem, right? I know a guy now, he's buying a bankrupt shopping center. It's vacant. There's one tenant at 1,000 square feet. He's either going to make a fortune or struggle, right? It's one or the other. And there's no in between. It's binary, right? Making a fortune or struggling. There's no in between with that. And I hope he makes a fortune, right? And it's a shot. We were going to finance it, and I just couldn't figure out how to do it. We didn't do it, right? And I still think he may make a fortune, right? On retail, we've been looking at buying something in Brooklyn, lending on it, and then potentially partnering up as the equity. But that's also changed dramatically because now other tenants in and around that area have just filed bankruptcy, large tenants. It changes the dynamic.
Yeah.
Strong retail is always going to exist. There are strong retail players out there that are low levered, who buy their product right, who sell it right, and it works. Urban, they're densely populated locations. It'll work for them. A lot of bankruptcies in retail have been very high levered, private equity owned companies that have sucked out every dollar for themselves and not really reinvested in their business, right? And so those are the majority, or very vast majority, of companies that have gone bankrupt. And that doesn't mean they won't reinvigorate themselves as something new going forward, or somebody else will reinvigorate them, the brand, working the brand, and making money again. But it's certainly there are well-run retailers that will do well, but it is difficult when you see one vacancy after another locations. Who's going to fill those voids? But there are some bright spots to it. A friend of mine in Florida said his shopping centers are doing well. A friend of mine in Louisiana said he's got 3 tenants bidding on one space, big space. So, there are pockets of it. New York is its own galaxy at the moment.
Yeah.
Mostly politically related, unfortunately.
Yeah.
But it's its own galaxy at the moment.
Well, I actually heard today that the Hilton has closed their Times Square branch down, which is quite a shame because it's an iconic building. I stayed there 1 year and it was absolutely marvelous.
Right. There's a lot of that. Look, we have a loan on a piece of retail land in Manhattan. I'm very happy to have that loan. But it's a great piece, and we underwrote it with another partner. We underwrote it. If things go wrong, what if rent gets sliced in half, and we're still okay, right? So I think that's good. But hotels. Another hotel just traded the other day. I forget the exact numbers in New York, and I think it was like 40% discount or $40 million discount. I don't remember the exact. It was just the other day. So hotels are an operating company. Kind of business. And New York is, again, challenging. Short stay hotels, extended stay are doing well. Today I toured a portfolio of bed and breakfasts here in the Jersey Shore area, and there were 6 of them. One of them was closed all summer long, and the other ones were busy all summer long, right? So, on the beachfront, right? So I guess hotel business will vary by location to location, but I think within the hotel business, there's probably some opportunity. I don't know how to run a hotel, right? But, I think there's probably some opportunity for shrewd operators who can withstand, the New York metric is like 25% occupancy, which I think it's what it is. I don't know how anyone can make money on that, but if you can sort of coast and break even and figure it out, hopefully this COVID thing has to end one day, and we can stop talking about it 300 times a day, right?
Well, exactly, correct. So, Elliot, in your line of work, for somebody who wants to go into the industry, who's already in the industry, and probably panicking with what's going on, they probably bought a property, it's probably negative right now, and it's probably wondering, hey, am I going to have to sell my property and lose money on it? What would be your advice for somebody like that right now?
I can give you a real life situation if you want it, right?
Yes, sure. Let's do that.
So, no names. I don't want to hurt the innocent, right? But we have an investment that 2 years ago. We're equity investors, not operators. And 2 years ago, I told the sponsor, it's not going well. Why don't you just sell it and be done with it? Like, on your second capital call, I'm not going to fund it. No, I don't think anyone's going to fund it. And why don't you just lose a little bit of money and move on, right? Sometimes there's no law that says you have to make money every day of the week, right?
Right.
And people don't make money every day of the week. So that real life situation was we probably could have lost 10%, 15%. I don't know. I don't know the number because we didn't really actively pursue it. They didn't really want to pursue it. Lo and behold, if we had to sell today, we'd probably lose all the money, right? Which is really not a good scenario to be.
No, it's not.
But luckily enough, I guess, we have the staying power because right now we have, this problem and that problem, the COVID problem, right? So it's hard to sell property in New York. So luckily enough, we can probably refinance something, stick it out of a year or so and see what happens, right? The problems come down to, what your business plan was buying a property. So if you bought a rent stabilized building, and we have other challenges with a bunch of rent stabilized buildings we own. That's a man-made disaster, right? The laws changed. They took away the posts, and you cannot make money now theoretically. So I think the situation is depending on, did you buy a rent stabilized building in Manhattan at a 3 cap, hoping to turn into a 5 cap, which you no longer can do, which wasn't a good business plan to begin with, or did you buy a piece of land in something Milwaukee, hoping to put WeWork there? Like I think if you're high levered, and you're borrowing, you have a definite problem unless you can pay that loan down or affect your business plan. If you're low levered and you have a very long-term horizon, you can withstand, the short-term pressures that come. Economic change. I guess, if somebody told me in February the economy was going to be closed down because of a virus, I would have said, and I probably did say, you're crazy. That's never going to happen, and stop watching, science fiction movies and watching comedy, right? But it did happen, and you couldn't have underwritten that problem, right?
No.
You could have underwritten. You could underwrite 20% rent roll decrease or whatever in a recession. Let's say you can't underwrite, a global shutdown of the economy. It's just very difficult to underwrite something, to fathom something like that. But it's unfortunately happened, right? So if you have a property now, if you're low levered, you'll probably be fine. You'll figure it out. You'll work it out. You'll tweak something. If you have a very high levered loan that was based upon refinancing that out at, and within a year or something, it's significantly more challenging. You need to be prepared to pay down that loan, to restructure your stack, and figure out if the long-term business plan is viable. You need to figure out what to do in the short term. If you were predicated on some nonsensical pie-in-the-sky valuation, you're probably not going to get it anyway, and you may have a loss on your hands that you have to take immediately. Yeah, it's really a deal by deal, case by case scenario.
So I guess your thoughts is like everybody else, they're just waiting for this pandemic to be done with and over. Although we do seem to be having a second wave here in Europe, where everything is shutting down. London, the UK shut down, we can't go there anymore.
Right.
Spain is shutting down. Denmark, I was supposed to go there this weekend. That's shut, so I can't go there anymore.
Right.
I know the States as well. From what I understand, you guys are still in the first wave. The second wave haven't hit us yet. And it could be really, really good, or it could be really, really bad. But
I don't know. I don't know, right? Look, we're looking for opportunities because my horizon is 10 or 20 years. If I'm buying a property, the horizon is almost forever, unless things change, right? And then we sold some buildings over last year that were performing, but we just had enough, and we decided to sell them and be done with it. We're selling another building because we got a good offer on it. Luckily, very luckily enough. For other things, we can't sell because there's no market for these buildings, or the price points are where we would not sell them anyway, right? But we're looking for opportunity for sure, both debt and equity. And if another shutdown comes, it comes, right? And hopefully it won't. Hopefully it doesn't. I don't think it will necessarily. People for the most part are taking more care and more concern for the most part. I don't think it'll happen. It may. And then if it does, we'll deal with that then, right? But generally speaking, the longer time frame horizon you have, better off you are, riding these waves that come out of nowhere. This comes out of nowhere and shuts you down, right? You can't. And the man-made disaster of the rent stabilized laws, specifically in New York, and that's a political game, and that no one knows when that will change. If COVID disappeared tomorrow, New York investors in multifamily still have the political problem of the landlord being the bad guy, and it's just not an accurate description of the average landlord in New York.
So where do you see the opportunity being once this is all post-COVID?
The opportunities are in any industry. Look, industrial is super strong, right? In a lot of cases, last mile industrial has been great. There's definitely going to be opportunity buying retail really cheap, buying retail debt really cheap. There's opportunities in very strong neighborhoods that have good rent growth, good schools, good job, good transportation. There's opportunities probably. We focus sort of on the eastern part of the country, very specific areas, but it's a big country. There may be amazing opportunities in Wisconsin. I don't know, right? But it's up. I know our markets where we're operating and trying to get things done. If someone showed me the greatest deal in Milwaukee, I'm not sure I would understand it, right? But for some guy in Milwaukee, probably will. But I think there's opportunity in every asset class. If you're a low levered debt investor, there's tons of opportunities. If you're a high levered investor, There's also tons of opportunities. Just the risk is
Okay.
risk metrics are a lot different, right?
All right, cool. And Elliot, just for the viewers, if anybody wants to get hold of you, what's the best way to contact you?
You can always call me. That's always great. My number is 917-748-1955. You can email me at elliot@hequities.com. It's ELLIOT at hequities.com. And I'm always open for conversation, brainstorm, talk about ideas, and see if there's a way to transact business.
Great. So guys, Elliot is the guy that we would normally go to for our interviews or for any kind of advice that we need when it comes to debt and equity financing. He is the guy to go to on the East Coast. We highly recommend him. If anybody has a question or they want to just brainstorm, as he said, he's the guy to speak to. Elliot, I thank you for your time today. I really appreciate it. I know you're a busy guy. We look forward to having you again on the show.
All right.
And hopefully we'll be able to do some more. I think one of the things we want to do with you, just for the viewers, is maybe we could do a three-part series on debt and equity financing, things to consider.
Sure.
And all those things. So guys, look forward to that. It's going to be coming soon. We're going to advertise it on our social media, and also if you're on our email list, you'll get a copy of that when it goes live. But Elliot, we thank you a lot for your time today. We really, really appreciate it, and I look forward to speaking to you soon again.
All right, Gavin, my pleasure. Thank you very much. I appreciate it. Thanks for having me.
Bye.
Have a great night.